And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Thursday, July 27th, 2023. The day it all came together. That's how I'm going to start tonight's update. And I'm going to start here on the NASDAQ. I'm going to leave it on the hourly chart for right now, but as you can see automatically, how I have now rearranged the labeling. And I think as I left it last night, that the possibility that this would be a 1, 2, and then we get the big 3 started was still in the air. And what the NASDAQ needed to do was just move and go to the moon. And guess what? That's what it actually started to do. This was a parabolic move. Now, parabolic C wave in the NASDAQ, whereas in the S&P, it was a parabolic fifth wave. Very interesting. Now, I'm not sure how many of you are aware of what's been called the Minsky Moment. And it's M-I-N-S-K-Y, Minsky. And what the Minsky Moment is, it refers to the onset of a market collapse brought on by, this is the definition, by the way, from Investopedia. But I'd heard about the Minsky. He was a economist, Hyman Minsky, and he put this all together as the defining moment in time where a sudden decline in the market sentiment inevitably leads to a market crash. So here we were, got it all the way up there. I actually was anticipating just a small pullback, and then we'd rally again. And I actually was thinking the NASDAQ, oh yeah, you're going to do this. You are going to make it back above 16,000. We're going to get this all done. I'll put a 4 there. In fact, I had put the 4 there. You see, here was the Fibonacci that went along with it. In fact, I got to take that down because it's no longer. But actually, I'm going to leave it up. For right now, I'm going to leave it up, and I'll explain why in a minute. But what Investopedia adds to this definition is saying it refers to the onset of a market collapse brought on by the reckless speculative activity that defines an unsustainable bullish period. That just made me chuckle and laugh, because it's like, whether I believe that it is unsustainable, reckless, what did Alan Greenspan, what did he used to call it? Irrational exuberance. Whatever you want to call it, it's like, well, it is what it is, and it happened the way it happened, and people did what they did, and they continued to do it. I mean, even as all of the markets, I mean, all of them, the Dow, the S&P, the NASDAQ, the Russell, the bond market, all the way from the 30 down to the 2-year note, down to the Fed funds, were just turning and being sold in mass. Gold turned and dropped. Why? Well, the dollar. Suddenly, then this great need to have dollars came in. I was like, wow. And everything just kind of gave up the ghost and dropped. But Meta, which had those great earnings, supposedly, yesterday, they stood there in this hard decline and continued to support that stock. They were not going to let it drop. I mean, the lowest that it got was back then like 311. After it had already been trading up around 324, 325. I don't even know what the high was today. It was pretty amazing to watch, to be honest with you. Meta's high today was 325. And pretty much from the open. So it went from the open at 325.12 up to 325.35, and that was it. And then they just kind of fluffed around with it all day. But Apple, they decided to run Apple today. They decided to run Microsoft today. They decided to run Tesla today. They decided to run NVIDIA today. NVIDIA, right? Opens at 465, runs to 474 basically, and then drops to 457. But then they said, no, we like NVIDIA, so we got to buy it back up. just this craziness of what they were choosing to support or continue to pile their money in. AMAT, for whatever reason, AMAT today. At one point it was up $10, but they supported that all the way through the decline. They weren't going to let it go. So it all is very, very interesting to watch how the market continues to react and not pay attention to really what's happening all around them. Or maybe some of them were trying to search for a reason. Like, why is the market suddenly turning? And as I had talked to somebody yesterday, and we were talking about the market, and they said, well, what do you think is going to really bring the market down? I said, well, you know what? It's not going to be the Fed, because they've given everything they got, and they've talked about what they're going to talk about and what's going to maybe come in the future. They don't seem to care about that, right? They bought the market. So to really kind of go into detail about why the market does what it does, kind of turns it away, and then you have to go look at, well, is irrational exuberance. And just they're all still in this bull market. Look what Meta had good earnings, this had good earnings, those earnings are great. Nvidia is going to blow the doors off. Amazon and Apple are reporting next week. They're going to blow the doors off. We still got all this bullish stuff going on. And it's like, wow, maybe not. Maybe not. And so when I was telling this friend, I was like, I really don't, at this point, I still believe that what was going to happen, or what will actually throw it over the cliff, this might be the start to kind of throw the caution flag out there. And obviously a lot of players came in and sold. This was their opportunity. And they're like, okay, we're out. We're getting out. We're changing our positions. We're rolling, whatever they were doing. And they did it. And now if that was based on the fact that what started in the bond markets is where I think it began. And if the bond markets are starting to go, that means that they are now embracing 5.5 or higher, right? Fed funds, 5.5. If we listened to Powell yesterday, what he talked about was, instead of being 5 to 5.25, it's now shifted, and now it's 5.25 to 5.5. And he was not rock solid about saying, and that's going to be it. We won't go any higher than that. He said it'll be according to the number, it'll be according to the data. And they're going to take that month to month. And he wasn't going to be pigeonholed accordingly to anything. Just like, we're not going to raise, we are going to raise, we might pause, we're not going to pause. And so all of that kind of went to the wayside. And really what that I think sunk in was the fact that inflation is a problem. And we have a robust employment market right now. People are going back to work. It's not, I mean, again, I want to say, excuse me. I don't want to say that I think it's a great thing that people are working and that they're able to have an income and they're able to support their families and build, et cetera, et cetera. Excuse me, need to get a little water. But it is inflationary. And it comes via wage inflation, because people are not going to be like, well, I need more money because I got to go pay these prices at the grocery store. I got to go pay these prices for energy. I got to go pay these prices for my utilities. I'm paying more in interest, et cetera, et cetera. So, and that's all because we're trying to get inflation under control. And the only way that we can do that is to stop the flow of money, right? So we have to take it out of the hands of us, the public. Now, so far, people are still going to work for the likes of Metaverse, Google, et cetera, et cetera. I mean, Google, they saw an article yesterday where they were talking about that there's some of the people that were making over $1 million, engineers. So these are the ones that are writing all the code and for that Google does, making over $1 million and getting a $600,000 bonus. So when you've got companies that are still paying that, you're going to have people coming in that are going to demand that. That's wage inflation. Now, what really is going to start hitting, and even Meta, through all of their, we're the greatest of the best, had to include in their report, which I think just got glazed over, was that they will have to put money aside for real estate Now, I'm going to tell you once again, they got plenty of square footage to sublease here in San Francisco. They are not knocking down the doors to get it. They, before the building, while the building was under construction, walked in and took a lease for the entire building. And I believe it's 25 floors. And there's another one that they took the whole space and they are not using it. And they're on the hook for the lease. So if you think the owners of those buildings would be like, well, we're not going to let you off the hook. You're going to have to sublease it. So that's our next problem that we have, folks. So how much is Meta going to have to do? And trust me, I believe it was upwards of like 80 to 90 billion dollars that they had to set aside. So that's a lot of real estate. And it's not just here. They have a gigantic campus south of San Francisco down in Menlo Park, which is not a bad area. It's very nice, but it was wide open. It was actually marshland, but it was wide open. And so Zuckerberg, in his, in the time, that's what you did. They had plenty of money. They went in and bought all that property. And then they started to construct buildings on it, which now are still empty. So, they went from like 80 or 90,000 employees. They had to start cutting 10,000, 10,000, 10,000. They had to start cutting them all back. Now they got a lot of real estate they got to deal with. And they're not the only ones. So does Google. So does Microsoft. So does Apple. Apple's got that big, I call it the space saucer, because if you've ever seen a building of it, it's this big round building sitting down in Sunnyvale here south of San Francisco. And they're not just here. They're all across the world. These are global companies, right? So when you got to start dealing with that, now add into that we got this whole thing about the commercial real estate. So when I was talking to this friend, I said, well, I think what really could start to tick it off, and it's yet to come, and we'll hear more about it as we start to end the third quarter and go into the fourth quarter of 2023, because a lot of these loans come due in 2024. And when you're trying to refinance a $500 million loan or greater, takes a lot of time. So they're going to be starting that process. So we still have things out there that could really tip this whole thing over. But back to what happened today. Now, here again in the NASDAQ, I went ahead, I put the 5 up there. There's the minute 5, the minor 5, the intermediate C, the primary B wave. I'm going to just put this out real quick to my weekly A, B. Right? I've left all this up, and I'll tell you why in a minute. But I put the B up there. Now, initially, I thought I had already put it on there, but I guess I didn't. Back down to my hourly. Oh, I didn't. I will. So let me first go over this. What I normally, like in the S&P, what I'm looking for is the formation of 5 waves down. The NASDAQ did it. And as of the 24th of July, I could count 5 waves down. But I kept giving the benefit of the doubt to the market that they were going to correct all of this. And I could put a 4 there, because in reality, what could have been 1, 2, 3, 4, 5 could have been an ABC. Now, if it came close, 15,512, let me just get that number. 15,511 was the low today. That's getting close, because if it starts to break 15,484, then we're dropping below this low, and this is done. So what I had discussed is what I'm now continuing to count out. And this, if this turns into 5 waves down and it breaks below here, which I would suspect it will, then I'm going to have 1, 2, 1 of 3. 1 of 3. I could put a minute wave here too, wave 1 here, put a minute wave 2 here, and I'm looking for minute wave. What does that begin to tell us? My first state, I'm going to look this way. And actually, before I do that, let me go back over because I do want to take these off. If there's any chance in the world today that the NASDAQ holds this low, although I can, to be honest with you, I can go 1, 2, 3, 4, 5. Now, this came before or after there. So it was interesting. So what we're really looking at here is that I'm going to go 1, 2, and this was the 3, the third. So if that's all we get, and somehow the NASDAQ manages to pick up and roar higher, there is that shot that this is an A, B, C, or this is A, B, wow, ABC up. And for A, that it works out that this is still the B wave. So this is an A wave, this is a B wave, we're working on the C wave, and it's still going to be a fourth wave. Huge. Bigger than I would have ever thought. And when I look at it on a 4-hour chart, there's wave 2. Here's wave 4. Okay, 4-hour chart. All right. I can live with it, right? I can live with it. But on the 1-hour chart, like, wow, that's pretty big. But it could be just the case. In which case, if we come down and we finish the C, right? A, B, C, it'll be interesting, won't it? But then we'll rally back up. Maybe, but then the expectation would be if we get an A, B, C, and a 4, and we rally back up. First of all, I have to take all this down. But still, I'll be happy to do it if we get there. Then these upside levels would remain in place. Now, I'm going to actually take that off because that takes that was on if we were working a third wave up, but we're not. So what we have in place, as long as it doesn't do there, these are for minute wave 5, which I've already marked done, but let's just say it isn't done. Then we have, next up would be 100% at 16,058, and then we still have these levels. This is minor wave 5, would equal minor wave 1 at 16,396. Minute wave 5, and that's the case it would be starting from here, would be 16,413. So that was a zone, as I explained yesterday. That remains if the market really holds itself above, maybe a little bit below, and then turns and rallies like there's no tomorrow. That's really what's got to happen. Now, is that what I'm looking for? No, obviously not. I really do believe when I take and compare this to what took place in the Dow, what took place in the S&P, what took place in the Russell, I got confirmation from market to next to market, next to market, next to market that probably that the turn is beginning. Now, that doesn't mean we're just going to go straight down. But I do think we're going to have some pretty strong legs, and we got a good, strong one to kick it off. So let's just finish up here and go over to the S&P, where you're going to see that that strength was much greater than here, because the S&P did move straight up to resistance, to that 0.618 resistance today and this morning, and made a new high for the sequence, and then turned and collapsed. So again, finishing up here. Right now, the way I'm looking at it, if this is all done and this is 1 and this is 2, this is going to be 1 of 3, and I got one more leg down to complete, to kind of start to get that in order. Excuse me. And now I'm going to put this next one on, which is going to be the, oops, that didn't work. Let me try that one again. Remove it. Move from that high to that low to this high. So what we got is 100% is 15,325, and that's where wave 3 would be 100% of wave 1. You can remember 1, 2, so this would be 3. and we'd really be looking for a lot more. So this stronger rejection, this turn in the market would pick up steam again because we'd be dropping in a third wave. A third wave, normally the longest and the strongest. So we're looking for it to come in maybe as low as there, right? This high to low was 300, almost 400 point turn. That's the high from today, this morning on the opening. Bing, get it up there. 15,904, and the low, 15,511. And do the math. 400 point turn in the market. Now, if it takes it from here and it comes back and it does a 400 point turn, we're going to be down here. So there you have it. That would be a nice move. That would put us in greater than 100. Third wave might be done. And again, this is the third wave. This is minute 1. This would be minute 2, minute wave 3. And I'd be looking really for 1.618. Tomorrow's an expiration. Weekly, but tomorrow's an expiration. And there's so much that's going to be coming off. And if they move in tonight and tomorrow and just start to push and sell, a lot of positions are going to have to be adjusted. Okay, so it could be a really bizarre day in either direction. So beware. So right now, I'd be looking at this 1, 2, 3, 4, 5. Now, is it 1 of 3 or is it all of 3? To be determined. I don't know. But I'd be looking for a fifth wave down to finish this 5 waves off of that high. So we have support 15,448, 15,325, 15,188, 15,103. Those are the levels. But in terms of fib, this one and this one don't have any play, although that one's the one that came into play this afternoon. But that one and that one really, on a fib basis, I'd be looking at that and then that. So if I were to clean this up real quick, and then I'm going to move over. That. I'll leave it up just because we want to see what it looks like. And I'll put this one on because we do use it. 2.618. And color it properly and say, okay. So here's what we got, right? 618, well, we kind of drifted through it, came back above it, but I look for it to break. 100% is 15,325, a break there. We will have price support, but as far as fib support, the next level comes at 14,967. There'll be support all the way down, but price-wise, but that's on a fib basis. So that's what we'll be looking at. 2.618, if they really start to crash this thing, we're looking way down. I'm not looking for that tomorrow, but then again, stranger things. So we're seeing all of our moving averages on our hourly chart. They're starting to turn. One quick one I want to make a little bit of a look at, the hourly. You see, the hourly turned and it finished in a negative position. So all of the moving averages, the only thing that really went above and closed below are the 4 and the 8. The 20 is right here, right above the low. So if the daily chart comes down and starts to break there, we might get a little bit of a rush to bring it down to that 50, the daily 50 moving average. Guess where that is? Just above or just below 1.618 support. So is it possible? Yes, daily chart tells us cleanly. All right, so let's go over to the S&P. This is the big difference in that chart, right? Okay, let's open this up so we can take a peek. There's the hourly chart. So here was the 4, even moved the 4 out. I had all my numbers put up, and it got up to 46.34. And actually, the resistance level was 46.27. So it went just a little bit above it. And you could see that it hit it early, tried to go up and equal it. In fact, that's really where it did. No, tried to, got up to 33.50 And then that was it. And that was on the opening. And then they started to sell it. We had one little buying, and then they walked in. So that was right about 1 o'clock. 1 o'clock Eastern. Bam, bam, bam. And they just walked in and they sold. They sold. This was, if you're a day trader, this was the type of market you're like, oh, just give me the strength to put it on and hold it. Because this is where you made thousands of dollars on a one lot, if you were able to hang on and let it drop. So here as well, 1, 2, 3, 4, and we need a 5. This market remains in place for right now. This will be the final nail in the you know what to the rally, in my view, because that is wave 1. If there's any chance on God's green earth that this wants to continue, and that this somehow is turning into an irregular 4, right, with the zip up that it did, and even if we're just counting it in here, this was ugly, and this was very confusing yesterday. Well, there you go, the parabolic move on air, on Meta's earnings, on whatever they came up with. But there it went. And they let it happen. They let it carry through. And then somebody somewhere, and it has to be somebody big, some big player, some big trading firm, some big bank. That was it. Turn it on, ba-boom. And like I said, I believe it started in the interest rate markets, in the treasuries. So that's what I'm looking for here. Now, let me go out to this one. This is where I have it in. So here I have it in. Let me go down to the 4-hour chart. So this would be wave C, right? So what becomes important for wave C is the first one is 618. We're going to compare wave C, primary wave C, to primary wave A. So the first thing that we kind of look for here is that primary wave C will go below the low of primary wave A, which is all the way down here at 3502. But actually, I probably would move it up because we're going to go on contract. And right now we're doing in the September contract. So that's the October low via the September contract. But the adjusted low, and I believe this would have been the December 2022 contract, was 3502. So wave C would be expected to come and break that. So, but 618 should find some support. There will be plenty of other support in between, but now we're talking about for the big, the C, the primary C wave. If this high is in, we're looking for a primary C wave. It has a lot of room, but it's not going to happen in a month. We might contain a crash or two, but it's not going to happen in a month. It's going to take time for this thing to unfold. There's going to be plenty of rally. There's going to be plenty of decline. We're going to have to be flipping positions. We're going to have to do a lot of things just to play. But the trend is I think, reversing back, right? If I consider this all counter trend, it's because the larger trend, being corrective, is down. This was counter trend. Now, if that's done now, we're resuming trend. I would suspect and you can see on a daily chart, that's like a blip. That's like, oh, really? That's all it was? It's going to be much harder. It's going to drop like we did here. And I think that could be the initial drops. Like that one, 42.66 down to 4. It was like a 200-point day. That was a daily move where the S&P was down 200. We'll probably get some of those here. Now, where does it project to? Remember, I've been talking 3,000 to 2,800. wave C would be equal to primary wave A at 33.28. So that is a target. 25.20 on 1.618. So the numbers for wave C, when comparing it to wave A, equality, second, 0.618, third, 1.618. But this one would have to come down and it would be a failure. A failure for wave C to take out the low of wave A. So it's there, but I'm not really looking for it. I'm looking for here. And I actually am not necessarily looking for this one. I have other major support in terms of the larger supercycle wave 3 in the cash. I can go over there and do it in the cash. Projects to 28, or actually, excuse me, 29.80 would be 0.382. Now, that might just be the bottom for cycle wave A, because remember, that's what we're working on now. On a primary degree, we need a primary ABC to finish cycle wave A. So that's now, if indeed we're dropping in the beginning stages of primary wave C, what we're looking for is the build, and C waves are always 5. So I'm looking for 5 waves of intermediate degree, dropping us down to form primary wave C, and to put the bottom in for that initial cycle wave A. Then we get another get out of the way rally and a primary B wave. So we just finishing a B wave, excuse me, a cycle B wave. We just finished a primary B wave, and look at how much noise it created in terms of new bull market. It's all, we're just going to the moon. Wait till you hear what they're going to talk about for that cycle wave B. So there's plenty of opportunity for being long and being short. So what I really kind of want to switch around, I want to present this big picture, but I really am going to just present it because I think we're starting it, and everybody wants to know what could the potential be. Well, that's it. But I'm going to be dropping it and really presenting this all on a day-to-day basis, because from day to day we might be sellers, we might be buyers, and even in a swing trade, you're going to want to buy it. It's going to rally, and it'll rally hard, and it'll rally fast. And then it could drop, and it'll drop fast, and it'll drop hard. We're going to get both. Why don't we want to play both? So again, my goal is to help everybody to really become more efficient in just being able to trade whatever is out there and happening. There was really great money to be made today, folks. And I didn't have to worry that I'm long, or where do I get long, or do I buy it, or do I sell it? You just play what's in front of you. You play the price action. You see what's happening. You just go with. And I'm flat. I don't have any positions riding overnight, so I'm not worried about what they're going to do overnight. And I'm certainly not worried about what they're going to do tomorrow. I'll take tomorrow when tomorrow comes. And that's what I'm really trying to just put out there. And if our mindset is just set on what's we're doing each day, and trust me, there are days where it's like I'm just not in tune with the market, and I get all twisted around and end up giving up money. So it's not always easy, particularly in this case. But if we're really going to drop in a C wave and we're going down, remember, this is just fact. It's going to go down a lot faster than it went up. And it'll be very consistent. So because when it drops in an impulse, which is what the C wave will produce, labeled 1, 2, 3, 4, 5. Wave 1 is down, 2 is up, 3 is down, 4 is up, 5 is down. Those are easier to identify. And we're within the first intermediate degree, wave 1, and we're likely still within the minor wave 1, right? So what's inside the intermediate 1? 5 waves of minor degree. What's in minor 1? 5 waves of minute degree. Repeat, rinse, repeat. Wash, rinse, repeat. That's what we're going to be doing. I love catching those waves because they're easy to identify, and they should follow through to what they're doing, rather than, well, we're in a correction and we're going to go up, we come down, we go up, we go down, we don't know, and then they do this, then they do that, then they do this, and you get all twisted up. We will be very directional. Seemed that we were here too, but this is going to be much more clear. So again, Going to be looking for additional downside. And initially, if I had to say, let me open this up. And let's just put something in there for wave 3. Well, we're already beyond all that. So if that's done, because it looks like it is, and then we're going, oops, get rid of that. And then I want to just go over and do this. And if we already have that wave 3, and that's going to be down to there, then a wave 4 can bring us all the way back to 45.80, 45.81-ish, up into there, which is actually just in the 1 hour 4. Pretty normal. And then we get that next wave down. So we get a 1, 2, 3, 4, 5. And that completes that first. I'm not sure if I'm going to call it a minute or a minor, but it completes that first 5 down on an hourly chart, giving us stronger confirmation. All done. Let's move. This is where I'm going to finish it for today because I'm already going along because I kind of talked a little bit too much in the beginning. Now, tomorrow, let me just double check. I'm pretty sure we don't. Yeah. On Friday, we got a whole bunch more stuff coming out. We have personal at 8:30 a.m. Eastern personal income and spending. Then also at 8:30, we have the PCE index. So that's an inflation index. And we have the core, the year over year. Again, the core year over year. We have an employment cost index. And then guess what we have at 10 a.m. Eastern? We have consumer sentiment. So we got a bunch of stuff coming out tomorrow as well. I mean, today was a pretty solid economic data dump, which they did, and they had no idea what to do with it. Up and down, and then finally they just caught wind that we're just taking it higher, and they did, which was the mistake. These weren't all that good, although GDP came in better than what they thought. So it's just crazy at the moment. But we do have some numbers again tomorrow. As far as updates, the next update for the Elliott wave update will be on Sunday, July the 30th. I will attempt to do a big picture update across the board, at least on the S&P and the NASDAQ, and then for the treasuries. Gold and silver got caught a downwind today. We'll see. Dollar was strong, so that all needs to be updated. I'll try to get that out Sunday. Saturday. I will give it my best try. In the meantime, have a very successful trading day tomorrow. And again, the next Elliott wave update will be on Sunday, July the 30th.